Happy Friday. Been a little while since we've been on, but yeah, today we wanted to talk about real estate. It's really a big buzzword. If you get on social media, it's all over the place. There's gurus all over the place. There's people talking about passive income streams, and there's no doubt that the wealthy people use real estate as an investment for tax benefits and passive income. And today we just wanted to talk a little bit about that, different types of real estate investing and how you can get started. Dan's going to talk most about this because this is right up his wheelhouse, and I know he loves talking real estate. So Dan, let's just explain to people what types of real estate investing are there, because there's a lot more than most people would think. It's more than just going out, finding a house, buying it, and getting a renter in there. There's lots of different ways to get into it, and lots of different avenues. So maybe start there, and then we can talk about how someone would get started in real estate in some of those different areas.
Yeah. I mean, well, if you think real estate, like if you own your house, that's a lot of people own a house, especially if they're clients, right? So they own some real estate. But for the sake of this video, let's talk about investing in real estate, right? So the only way you really make money in a house that you live in is you hope it goes up in value over time, which it probably will if you hold it long enough. And then that's called appreciation. So you get, their house value was here, and over time you sell it for here. So that's one way to make money in real estate. But think of real estate like as an investment. We want to make sure that it cash flows. So if you're following any of the gurus out there, which I'm not a guru, don't claim to be, just been in the game for about probably 4 years now as far as investing in real estate. Probably been studying it for 7 or 8 years. Just reading the books on it. How do you find a deal? And then we call them exit strategies. So to Ben's point, once you get a property, you want to make sure you have multiple exit strategies. You don't want to have just one way to make money, right? Because then if that one way doesn't work, you have a bad investment, right? So some of the exits, let's say we find a property and we're like, hey, we buy it for $100,000 and we know we could sell it right away for $110,000. Okay. Or we can fix it up a little bit, spend a little more money. Maybe we put $10,000 into it and then we sell it for $130,000, right? So we can sell it right away. We can, because we bought it low enough, we can fix it up and sell it. That's called a fix and flip. We can fix it up a little and rent it. That's called a hold, right? And then let's say it cost us $500 a month to keep this property and the tenant is paying us $1,000 a month, right? That's a positive cash flow. So I'm going slow, trying to explain some terms. So we got sell right away. We can fix and flip. We can hold it. So you keep the property for a longer period of time and collect the cash flow, right? Yep. You could sell it on a contract for deed where you actually, convert it to a mortgage. You become the banker and the person that buys the house from you pays you over time, right? That's less maintenance. You've offloaded the having to take care of the property, and then you locked in the sale to somebody. So there's risk and reward with all of these, but I just listed like 4 exits on one property, which is kind of cool. You want to have those. These are for the active investors, right? You want to know this stuff if you're the active investors that are actually analyzing the property to see if you can make some money, right? But maybe you're like, Dan, I'm pretty busy, man. I got my job, I got my family, I got my kids. I don't have time for that, right? And we meet a lot of those people, right? So then you want to start learning about how do you get access to somebody that does those deals and maybe you could partner with them, right? Maybe you could stick some of your money into their deals and just get part of all the ownership and the profits and the goodies that comes along with it, but not have to do any management or learn all the stuff I just talked about, right?
Mhm.
So you would partner up with a professional, right? And there's probably professionals in your area that you could get to meet if you want to be more active in the partnership. Or there's bigger, once your net worth gets high enough, there's you could look up, Grant Cardone. He's doing fundraising all the time for his deals, right? And you can just send him money and hopefully receive some income over time. I will say the less involved you want to be, typically the less returns you're going to get, right? And the more you trust the partner that you're taking on or trust the professional, the safer the deal is, right? If you're just like Google and the first person you find that's raising money and you send them 100 grand, I mean, there's risk in that, right? Because if he's a bad operator, you don't really know how the deals he's putting in. Like, so risk is always same thing with any investment. The more informed you are and the more you trust the people running the money, the more likely your return's going to be. So I'll pause there. We talked about a lot of stuff. We talked about some exits to get out of real estate, make sure you can make money. We talked about a couple ways to get into the money, get into the deal. But yeah, what questions or what thoughts came up for you, Ben?
Yeah, no, and that's even just one class of real estate that you're talking about. You're talking about single family homes, so, and that's where, and I feel like that's where most people start. So that's really good. If, let's say someone wanted to, let's just say me as an example, let's just say I said, Dan, I want to be an active investor and I want to start going out and doing some fix and flips and start buying some single family homes. How does someone get started in that? I mean, you can even tell your story a little bit, how you got started in doing that.
I mean, there's 25 real estate agents on every block, right? So get connected with a real estate agent or two, preferably find someone you like and trust and can have open talks with. But I would start having them do some shopping for houses in your area. That's on the MLS. It's called the multiple listing services or whatever. So you're not going to be buying probably the best deal as far as getting the lowest rate, but you're going to get access to a lot of properties that are for sale, right? And that's how I bought the first 8 properties I bought. It's not like it's bad. That's when I flip a property, then I'll send it to our real estate agent and they list it and they help me sell it and get the best price, right? So you're typically, but I would start shopping, start looking at projects. Secondly, if you're really active, you got some energy, like make some phone calls, call some investors in the area, start looking up some properties and see who owns them. Call the person and ask them if they want to sell their house. If you see a property that maybe looks like it's vacant or maybe distressed a little bit, or maybe it's the seller and you personally, someone's like, hey, Joe wants to sell that house. Go talk to Joe. If you can get direct to the seller, that's what we're working on now. It's called direct to seller marketing. If you've ever heard of wholesaling, we're actually marketing to find those direct to seller houses from people, because there's people out there, they don't want to go through the headache of listing and cleaning up their house and fixing the repairs and waiting, having people track it in and out of their house and have it set up for showings. They literally, or they're in a pinch and they need money. Like they're going to bounce, their check is going to bounce and they can't pay the payments, right? They're behind on payments. Maybe it was given to them and they're out of state. So we try to market to those people that have motivation and need to sell fast and make it really simple. That's direct to seller. You can do that too. You don't have to, if you want to really get in this game, the better you can find the deal, right? The better you can get the deals on the front end, the more you're going to, the more you profit. You know, for me, I always have to make sure the deal profits because I always help investors money in. So if I'm like flipping properties and not making any money, yeah, it sucks for me, but it's not going to be very scalable if I'm going, hey, thanks for investing with me. You didn't make any money. Right.
Right.
So for me, it's just math, and the deal has to make sense. I just looked at a property a couple of days ago. We drove over to the guy's house. He called me, got one of my letters, and, you know, he's like, hey, I'd let this property go for $75,000. Right. Well, it's probably going to sell for $100 once it's fixed up, and it needs at least $25,000 of work. So it's just math. I like the guy. He knows me. He's a friend, actually. And I'm like, you know, I literally couldn't give you $40,000 for this property, right? Because there's no margin, right? And $25,000 to put in was conservative. It probably would have taken 30, right? And, you know,
right.
Here's another thing too. If somebody lists their house and sells it for $100,000, they don't get $100,000, right? They got to pay closing fees. They got to pay real estate agents. They might walk away with $92,000, right? After all said and done. So you got to take that into consideration too. Like it's not a bad thing to make profit in real estate. You know, it's just, you got to learn your numbers. So if you want to be an active investor, you just start picking up some books, start reading about it. Rich Dad Poor Dad talks about real estate. You know, who's that? Gary Keller has a really good book, The Millionaire Real Estate Investor. That was a nice book. He's got the Millionaire Real Estate Agent if you want to get in as a real estate agent, or you've got the Millionaire Real Estate Investor, which teaches you basic principles of how to analyze real estate. So maybe that's your book you put in the sub notes. You know, I like that book. There's tons of books out there on real estate, but just, you know, start listening to some real estate podcasts, right? The Real Estate Guys podcast. I mean, that's literally the name. They talk a ton, you know. And then to Ben's point, you know, there's mobile home park investing, there's RV park investing, there's there's like apartment investing, you know, there's storage units, there's single family homes, you know, there's a ton of different real estate. There's land, right? There's farmland, there's vacant land, there's hunting land, there's developing properties, right? So you can get overwhelmed with all that, but you just got to learn some basic numbers, right? Like with any investment you want to buy, you got to have room to improve it, and you want to sell and make sure you make a profit, right? So what I'm trying to do at Dan Kramer Inc. is I have a financial practice, as many of you know. Ben's involved with that, and it's helping. It's how do I bridge that gap to help the average person get into real estate, you know, and not to jump over to like typical finance. But if you've listened to us before, I think it's broken. I think it's broken because they've convinced you to go to work, trade time for money, right? By the time you get a little of your extra money, they convince you to put it into a 401k or an IRA, right? Yep. You don't learn anything. You get locked out of your money. You're told it's going to be this big number at the end. Well, guess what? It's not a big number at the end because there's taxes that go up. There's inflation that goes up. There's fees within the account that are consistent or go up. There's market losses that happen, right? And it just, I don't want to be a Debbie Downer, but cool. If that's all you have for retirement, you're going to be in a bad spot, right? So Rich Dad Poor Dad, Robert Kiyosaki, he talks about true diversification is having the paper assets, your retirement accounts, but also you should get into real estate and maybe business. Well, a lot of people maybe don't want to start a business, but the cool thing with our process, we teach you how to unlock money, maybe you got money in your house that you don't know how to use. Maybe you have money in your retirement accounts. We're not telling you have to, but we show you opportunities to get access to some of that money and maybe reposition it into real estate or reposition it into a business or get control of your money so you're not just backed into a corner by the time you retire. So
Right. No, and just on that note, even having retirement accounts with big numbers in them, big amounts in them, doesn't necessarily mean that you're going to enjoy a lot of income. That's something that a lot of people don't understand is, yeah, I've got this big, huge pile of money, but how do I turn it into income? So if you have those avenues and you're taking advantage of, maybe you get a match from your employer on your 401k, like great. I don't want to make people think we don't like certain products. Every product has its use, but if that's your only strategy, how are you planning on turning that into an income stream? How are you diversifying and adding additional income streams? Because
Mhm.
unfortunately, when the typical financial advisor talks about diversification, it's different stocks, different bonds, different mutual funds, but it's all in that paper asset category, and you still have no real assets. So, kind of the last thing I just wanted to bring up, Dan, is you mentioned math, and maybe you can just go into this real simply. We've talked before about that 1% rule. So let's say someone wants to buy a property and hold it and rent it out. Can you just talk a little bit about that 1% rule for collecting rent, and then we can kind of wrap it up?
Yeah, super simply put, if this is back to that active investor who's like, I want to learn how to find a property. Okay, well, I look at least 10 or more deals, properties a day, right? Enough people have done deals with me, are excited, or I'm teaching or I'm mentoring, that I tell them, send me the deal. I'll show you what I see, right? So you want to get to that point within 3 or 4 minutes, you can at least say, hey, this is something we can play ball with, right? And
Mhm.
so the 1% rule is like a quick litmus test. And it goes like this, right? If I buy $100,000 property, that's all in, right? So if I buy it for 90 and I got to put 10,000 in to fix it, that's $100,000 investment, right?
Yep.
If I can't get 1% a month, which is $1,000 a month rents, then it's not going to work, right? So Ben, put that into practice. Maybe I get somebody who might send me a $300,000 property, and we got to put 50,000 of work into it. This just happened a couple days ago, right? Hey, I think this is a great thing. We can get this done, and they're excited. I'm happy for them that they're looking at deals, and I go, awesome. Show me the comps or the comparable, resources in the area. Are we going to be able to rent this out for 4,000 a month? Oh no, I was thinking more like 1,500. Okay, well, let's do the quick math. If you get it for 300, you got to put some money into it. We're going to be at least 350 into this thing by the time you raise the money. And then you
Mhm.
also got to factor how long it's going to take to fix it up to create income. Because if it's a
Yep.
6-month renovation, you got to factor in the 6 month of the cost, right? So that's why I'm saying, okay, let's say it's $400,000 of money before it's going to start kicking a return. Well, 400,000, 1% is we need to at least get 4,000 a month just to break even on this property. So if they're coming in and saying they're going to rent it out for 1,500 or 2,000, the deal can't work. Don't even waste your time if you're trying to make money, right? If you're
Okay.
just a flipper and you're like, I know this property, like there's 5 around them just like it, and they sold for 550,000. Okay, cool. I mean, this is comparable, and you buy it for 350, you're in it for 400, and you can flip it for 550. Okay, that's a different exit. But if that exit falls through, remember right when we started, you want to have more than one exit. Because if the market tanks that day and you're stuck with the property, and now the most you're going to get for it is 400, and you're in it for 400, you're going to take a loss, because when you sell it for 400, right, you got to pay all the fees. You're not going to walk away with that, so you lose money, right? So you
Right.
got to have multiple exits. So even when I buy houses to flip, I go, hey, worst case, I can rent this out. Or worst case, we can try to sell it to somebody who wants to buy it on a contract. Right. So I always want to have at least 3 exits, and that reduces the risk. And remember, I'm investing a lot of time with client and investor funds. So it's a little dicier than just, I hope I don't lose money. Right.
Yep.
I really don't want to lose their money. And I definitely don't want to give their money back without any returns and waste their time. Right.
Yeah. Exactly.
So I would encourage you, if you're analyzing that, think of it like you're borrowing your mom's money or your dad's money or your brother's money. You don't have to do that. And that is a way to do it if you don't have the money, right? Mm-hmm. Find somebody who has the money but doesn't have the time, partner with them, and go make them some money. You'll never have a shortage of money if you do that. I promise you. Somebody gives you money and you turn it into more money and give it back to them. They didn't have to do anything. They're going to give you more money, right? That's a story for another time. But I'm just saying, like, when you're analyzing the deal, if you aren't confident that you're not going to make enough money to pay them back with some extra and for yourself, really quick, move on to the next deal. Look at a lot of deals if you want to be the active investor. Don't get emotionally tied to any deal.
Yeah. No, that's awesome. Makes a lot of sense. And I think a lot of people have those types of questions, and I think this will be really good. Hopefully you get a lot of people watching this, and if you ever have questions about whether it's real estate investing or about finances in general, let us know. We can always get on a call and help you out with, like Dan was saying, with the organizational piece, help you try and find any money that you could possibly have that's not living up to its maximum potential, and help you get started in some of those things. But Dan, thank you, sir. And we'll get back on next week and bring some more stuff. So everyone have a great weekend. We'll talk to you later.